Hey guys, welcome back to the Compounding Oak, the channel for long-term mindset investors. Here, we invest €5 every Tuesday and track the growth of our portfolio week by week. Our goal is to invest in this portfolio for over 20 years, and our strategy is straightforward. The portfolio consists of two ETFs. The first, with the ticker symbol XLKS, is a growth ETF type synthetic ETF, focused 100% on tech. And the second ETF, which has ticker symbol FWRA, is an old world ETF type physical ETF that includes holdings from both developed and emerging markets. As of today, the portfolio has a negative return of 0.40%. And if we check here, we can only see the total return of the portfolio, or we can't see the performance, or the daily gain or daily loss. So what I've done is to create this portfolio on the Google Finance website, where I can see also how many holdings I have of each of these ETF. And also on Google Finance, we can see the daily gain together with the total gain. Now, this negative return is not as much as this one because the numbers are not the same, and probably because Google Finance and Trading212, they have a different way to calculate the exchange rate for the US dollars, because the holdings of these ETFs are located in the United States. And of course, this one, most of the holdings are from all over the world. So the exchange rate can be a little bit different, but we are almost there. A negative 0.37% and a negative total return of 0.40%. However, if I click here on one of these ETFs, you would see the total holdings that I have that are included in my portfolio also, which is here on the left that you can't see. So this is why I decided to replicate the portfolio and how much we are investing weekly on Google Finance. And here we can see that we've been investing on these two ETFs since the 14th of August. And on average, we are investing weekly €1 on the FWRA and €4 on the XLKS. This is how €5 are distributed on these two ETFs. If you see here, 80% on the technology ETF and 20% on the all world ETF. What I wanted to show you today, apart from the growth of this portfolio, is also the performance of the two ETFs compared, and why this, in my opinion, is a very simple and a good idea investment plan for the 20 years ahead. If you go on just ETF, you can compare different ETFs and see the chart, the growth chart, and also the performance. Here on this chart, I have in red the technology ETF, the XLKS, and here in blue and orange, we have our ETF, which is the Invesco FWRA, and another ETF that is called the Vanguard FTSE All World, ticker symbol VWCE, which is also a physical ETF. And as you can see from this chart, the Vanguard and the Invesco All World, they have the same growth from July 2023 because both of them follow the same index, which is the FTSE All World Index. Let's go to see the performances of these ETFs compared. I wanted to show you the Vanguard FTSE All World because the Invesco FWRA is a very young ETF, so you can go that much back in time to see the performance. They also have the same holdings. Okay, here on the left you have the Invesco FTSE All World, and here you have the Vanguard. They have the same holdings. That's why they have the same growth since July 2023, which was the inception date for this ETF, the Invesco FTSE All World. But yeah, they have the same holdings: Apple, Microsoft, Nvidia, Amazon, Meta, Google, Broadcom, Taiwan Semiconductor, and Eli Lilly. And I just wanted to show you what is the growth in the past for this index, the FTSE All World. So you can see why this investment plan can be a good idea for the long-term investor. Basically, the worst year that this index has had was on 2022. That could have been very similar or almost the same as the FWRA if this had an older inception date. While on the other side, the Invesco Technology XLKS, as you can see from the performance in the past years, the 2022 was a very bad year, while for the FTSE All World hasn't been that bad, okay? It was like minus 8.17%, and this was minus almost 20%, so almost double. This is why the XLKS is a growth ETF, because it is a roller coaster. It can go very up and also very down during these years, while the FTSE All World Index that we have now in our FWRA is not as volatile as the XLKS, as you can see from the chart here. So this is why it's a good idea to invest both in a growth ETF and on an ETF that is still growing during these years, but is much more stable. Because let's see how was the growth of this index, the FTSE All World, in the past. But we need to get rid of this in just ETF, because otherwise we can't see the growth of the index, because this is too young. So let's get rid of this. As you can see, we can go way back up to August 2019, and this All World ETF that follows the FTSE All World Index has had a growth of only 60%, while the Invesco has had a growth of 200%. So this is really a growth ETF. However, if you plan to invest for a long term, as we are doing with a plan of giving to the FTSE All World only 20% and to the technology ETF 80%, for the long term, you're giving yourself a good opportunity to growth. But at the same time, if you wanna exit your position in the last 5 years, you can switch these two values and start investing more on the All World ETF, so that you can avoid all this volatility in the last years, and you can invest on something that is much more stable and reliable with growth in the last years if you want to exit your position. Because if you were only going to invest on the growth ETF, and if you wanted to exit your position, let's say here, you would have lost all this growth here. So balancing your portfolio with something that is more stable and is not that volatile, it is a good idea to have a good return, but also be more safe at the end of your investment plan. At least this is my idea. And guys, this is not a financial advice. I am just sharing with you my opinion, and we are just seeing how this portfolio is performing week after week. Guys, thanks for listening today, and I'll see you with the next video. Thanks, guys.